right. Let's do this. Good morning, all you magnificent melon heads, and happy Thursday, everybody. Today is September 7th, 2023. Top story today is what happened yesterday. What happened yesterday at 10 a.m. Eastern Time specifically. That was when the ISM and S&P Global PMIs both came out. PMI stands for Purchasing Managers Index. It's a measure of the economic activity in the manufacturing sector and in the services sector. And then they also released the composite PMI, which is a amalgamation of both those two sectors. But the important one yesterday was the services PMI. And in particular, the ISM Services PSI. ISM is the Institute of Supply Management. These are private sector organizations that take these vast economic surveys from across the country, and they just interview people. What's your opinion on new orders? What's your opinion on your backlogs, your hiring, all these various sectors? And services came in red hot yesterday, unexpectedly. And you might be saying, ISM Services, the PMI index, who cares? Fed cares. That's why you should care. Because remember, guys, we do not have a free and fair market. We have a Fed market. And we're in this bizarro world right now of what will the Fed do? Good news means the Fed might crank down on the economy more, which means good news is bad news. Bad news means, the Fed might ease up and stop hiking interest rates, and so it's good for stocks, and so stocks go up on bad news. Well, yesterday was good news being bad news. Are you with me? Anyone? You guys in the back? We're good? Okay. So we got some good news yesterday in the services PMI, and that is bad news because the Fed is going to kill us all. Sorry for the doom lingo there a little bit, but that's basically the market's reaction. Now, the U.S. dollar, the DXY, instantly started to surge when that ISM PMI came out yesterday. The Dixie rallied. It was something like 50 basis points within a couple of minutes. All right, now that was the market saying a stronger dollar means the market saying Fed's probably going to raise again. And so people bought the dollar anticipating the higher rates. So what happened yesterday was the higher for longer crowd gained a little bit more traction. All right. Ever since we've seen the unemployment numbers ticked up a little bit, the jobs created were way down. We saw the odds of a November rate hike really plummet last week. So the pivot crowd was in charge. They were in the driver's seat last week. Well, yesterday with that ISM number, now the higher for longer crowd kind of has the conch, and they're saying Dixie's stronger. Stocks didn't like that. So that was the big story that hit yesterday. We also had a lot of layoffs from Roku, kind of an obscure one there. I mean, Roku, the streaming company, and they make the box that goes on the TV. You probably have a Roku sitting in a drawer somewhere that you used to use and you don't anymore. They're laying off about, 300 people? I forget the percentage of the workforce. A lot of numbers flying through my head at the moment. But the important thing there is it's another anecdote of more layoffs. We're starting to see these layoff stories pile up in the economy. That's important. Keep an eye on that housing sector because we've been saying for a while the missing ingredient to a correction in the housing market because the supply is so tight. Yes, the higher interest rates, they're pricing people out of the market, but there's also no supply. So the market is just frozen in place and it's not going to break one way or another until either supply or demand changes. Well, if we see a surge in unemployment, a few months later, people are going to start losing their houses. It doesn't happen instantly because first you go a few months behind and then foreclosure and short sale proceedings start, right? That all takes time. But within a few months of a surge in unemployment, we're going to see a lot of new home supply hit the market as people lose their homes. And in this illiquid market with 7% mortgages, there's no buyers. That means the price would drop. So that's why it's important to keep an eye on these anecdotes about layoffs. And of course, we've got shots fired by they with a capital T. We've seen a lot of personal attacks being launched at Samantha LaDuke, who ignited the entire storm of CoreWeave NVIDIA Magnetar and was the inspiration behind my video series. Well, we had Morningstar came out with a report last night. I'm going to get into it. I think I'm going to do a video about that later today. It was a cheap shot at Samantha, and they did not address one single item in any of part 2 or part 3 of my CoreWeave series. They did not touch Magnetar. They did not touch the shell companies. All they did was lob a few personal attacks against Samantha, calling her a Twitter rando. Really cheap shot, to be honest with you. and deflecting, and I think it's a calculated move. To me, it smells like somebody hired a crisis manager. Are we getting to somebody out there? Oh, I don't know. Well, with that, let's just go ahead and shrink my big melon of a head and look at the market, shall we? And while we're shrinking my big melon of a head, won't you please hit that like button, guys? It really does help me with the YouTube algorithm. And also, if you're new to the channel, won't you please subscribe? We do this every morning, and I'd love to see you tomorrow. Fear-Greed Index currently sitting at the barely neutral level of 55, ticking right on the edge of green. I think that PMI yesterday brought it back down into neutrality. We've got the S&P 500 is set to open about 32 points lower at the moment. That's about 0.7%. So stocks are down a little bit pre-market this morning. We've got the Dow, though, down 72%. That's doing a little bit better, down 0.2%. But the NASDAQ, check out the tech-heavy NASDAQ right now, set to open down 186 points, 1.21% lower prior to open on the NASDAQ. It's almost like somebody might have seen my CoreWeave videos. Uh-oh. Look out. Put a pin in that one. Might want to talk about that later. Now, here is the DXY, guys. This is the U.S. dollar as measured against a basket of other currencies, currently up 22 basis points. That's after a big run yesterday. And I just want to draw your attention all the way over here to the left side of the chart. Look at that big candle up there, right on the dot, 10 a.m. yesterday. That was the ISM Services PMI hitting the tape at 10 a.m. yesterday, and the Dixie surged. It bounced around a little bit, ultimately closed the day right around the high. And we are higher this morning. We've got a 105 handle on the U.S. dollar. And remember, guys, stronger dollar, that is bearish for stocks and bearish for asset prices because the dollar is the denominator in the pricing equation. As the denominator gets stronger, the value goes down. All right, looking over at the bond market right now, we got the 30-year Treasury is down 1 basis point, 4.35% on the 30-year. The 10-year is also down 1.5 basis points at 4.27. Hey, just a few days ago, we were at 4.09. I don't know if you guys recall, but the 10-year has been kind of been whipped around a lot these last 2 weeks. We were at over 4.3 about 2 weeks ago. Then we got some weaker than expected jobs numbers. The 10-year crashed all the way down to about 4.06. Now we're back up pushing that 4.3 level. So there's a lot of volatility in bonds right now. And you know, volatility is an indicator of an illiquid market, isn't it? And when it comes to the bond market, illiquid, not a good thing. Keep an eye on that one. Also important note today, the 2-year Treasury, it's down almost 2 basis points, but we are over 5% on the 2-year, 5.006 on the 2-year government debt. And of course, the 1 month is still anchored where it is by the Fed's overnight rate. So we have got 5.38% on the 1 month Treasury. And I just want to show you guys, this is the 2-year Treasury yield. And we are right at this high that was last seen on March 8th. And if you have not been paying attention, March 8th was the day before Silicon Valley Bank failed. So we have now reached not quite the level. We touched it a few days ago. We came back down, but we are pushing that level again, right back to those levels in March where we had the banking crisis. Keep an eye on the bond market, guys. Things are happening there. Looking over at commodities, we've got December gold futures trading at $1,946. That's up $2 this morning. December silver futures $23.27. That's down about 1/4 or 1%. West Texas Intermediate October futures for crude oil at $87.11. That's down about 40 cents this morning, or about 0.5%. A little bit of movement in commodities this morning. Not a whole lot happening there. Let's talk about ISM Services PMI, because this is the one that did it yesterday, guys. This is what sent the Dixie surging. This is what sent stocks lower. It came in here. What was the level? At 54.5. All right. It wasn't a skyrocket higher, but it was expected to come in much lower. And that's the thing. Everybody was expecting a big downtick, and instead we got a modest uptick. All right. Now, I just want to read this. The ISM Services PMI unexpectedly jumped to 54.5% in August, pointing to the strongest growth in the services sector in 6 months, compared to 52.7 in July and forecasts of 52.5. So we were a lot higher than they were expecting. Faster increases were seen in business activity, new orders, and employment and inventories. So this is an across-the-board surge in economic activity in the services sector. Supplier deliveries increased in the last 6 months. The average reading of 47.7% reflects the fastest supplier delivery performance since June of 2009. At the same time, price pressures intensified in August. Whoa, look out, guys, because that's important. Price pressures intensified in August. Why is that important? Remember what Jerome Powell told us at some of his Fed meetings and at Jackson Hole. He said he wants to see core non-housing services inflation come down. And this PMI is saying price pressures intensified in the services sector, which means those core non-housing services inflation numbers are probably not going to come down. So this means Jerome Powell is not getting what he wants, which means Jerome Powell is going to hurt us more with his rate hikes. That's why the market reacted as strongly here. Also, backlog of orders contracted a little bit, and I want to read this quote here. Sentiment among business survey committee member respondents varies by industry. However, the majority of panelists are positive about business and economic conditions. So that was the ISM Services PMI. All right, now that came in much higher than expected. I would point out, in the interest of fairness, that we also got the S&P Global U.S. Services PMI. So this is, again, a private sector organization, S&P Global, putting out a very similar data point on the same day. Now, this was the opposite here, guys. The S&P Global, you'll notice this one was down, and it's a continuation of this downtrend that started, it looks like, in May. So the S&P Global U.S. Services PMI was revised lower to 50.5 in August from a preliminary 51, pointing to the slowest growth in services activity in the current 7-month sequence of expansion. A weaker rise in output was primarily driven by renewed contraction in new business, and client demand was reported to have dampened by interest rate hikes and elevated inflation. So let me know in the comments, guys, what are your thoughts on the deviation between the two? Because we got an unexpected rise in the ISM number, and then we got a continuation of the decline in the S&P number. These two reports are telling us the opposite thing here. So we can hardly draw conclusions when we have two data points that tell us the opposite thing. But I can tell you the market's conclusion was that higher for longer, because we saw an uptick yesterday in the odds of a November rate hike. All right, the combined odds of any rate hike by November were previously as low as under 40%, and now they're at 45% of a 25 basis point hike and 3% of a 50 basis point hike. So combined, we're now at 48% odds of a rate hike. That's a lot higher than we were just a few days ago. So the market interpreted those two data points as higher for longer. That was the reaction yesterday. A couple other points I want to just point out here, guys. We got the Johnson Red Book Index. This is a measure of same-store retail sales. It's a weekly snapshot. It compares last week's retail performance to the same week a year ago. That one came out, again, good number, 4.1% increase year over year in the same-store retail sales. That's good because that is higher than the current rate of inflation, which is around 3.3%. So that's pointing to an increase in retail sales. I would add, though, that that is probably being driven by debt, by credit. And yesterday, we also got the Fed's Beige Book, which is similar to those PMIs. It's a snapshot of the economy as measured by a survey of a vast number of respondents. The Fed puts this thing out 8 times a year. And I want to read you a little bit of highlights from the Beige Book. Contacts from most districts indicated economic growth was modest during July and August. However, consumer spending on tourism was stronger than expected, surging during what most contacts considered the last stage of pent-up demand for leisure travel from the pandemic era. So my first thought about this, consumer spending on tourism was stronger than expected. I started laughing right away because there's my buddy Mish with his Swiftonomics, which I love to bust his chops about the Taylor Swift thing, but it is hard to argue with his logic because you can see the surges in spending in the regions where Taylor Swift went. A lot of people followed her. They got hotels, they got restaurants, they spent money in stores. You could see it. You could see it in the economic data, the money that was following her around. And anecdotally, I even saw it back in my hometown in New Jersey, where there was somebody spotted Taylor Swift a few weeks ago in Long Beach Island, New Jersey. And you couldn't get onto the island that day. The traffic was bumper to bumper across the whole bridge. Everybody wanted to snap a selfie with Taylor Swift. You couldn't even get onto the island. It was incredible. So the Swiftonomics thing, guys, as much as I like to make fun of it, it's real. I mean, there it is. But a noticeable thing here in this sentence, though, most respondents considered it the last stage of pent-up demand in leisure and travel from the pandemic era, as if to say it's almost over. So that's important because travel is one of those services that has held up the core non-housing services. So if most respondents think it's about over, maybe we are looking at some lower services inflation in the near future. But they also said retail spending continued to slow, especially on non-essential items. Some districts highlighted reports suggesting consumers may have exhausted their savings and are relying more on borrowing to support spending. Relying more on borrowing to support spending. It's almost like they've seen this chart of consumer loans, credit cards, all revolving plans, all commercial banks. America's credit card bill. Somebody is finally paying attention to the fact that, hey guys, Americans have more than $1 trillion of credit card debt, and that is not a good thing. The cost of inflation has been going on the card. The cost of following Taylor Swift around the country has been going on the card. All right, guys, I hope you're making those payments. Also want to talk about this one. Roku turns to layoffs again and removes streaming content to cut costs. Roku, their all-important ads business, is in a slow phase. In an SEC filing, the company revealed plans to cut over 300 employees. Guys, that is just another instance of jobs being lost. And these anecdotes, they're piling up. All right, something else I want to talk about. I got to put this on the screen because I am seeing a lot of personal attacks against Samantha LaDuke. I've seen some cheat shots at me. I've been called a charlatan. Ooh, I was called a charlatan. I picture a guy saying, "Oh, you're a charlatan," when they hold up their pinky, sipping their better than you tea while calling me a charlatan. Look, guys, I call myself nobody special because I am an engineer by pedigree. I am not professionally trained in finance. I wear that on my sleeve. So go ahead and call me a charlatan. I mean, it's the title of my whole freaking channel. I don't know. Thank you, I guess. But listen, you can launch personal attacks at me. You can launch personal attacks at Samantha or Kaship or any of the other guys who have been joining in on the work that I've been doing on CoreWeave. But I have yet to hear one critic, one buy-side NVIDIA person try to even explain the network of shell companies that the CoreWeave executives used to run when they were trading carbon credits at NatSource. And this was featured heavily in my Part 3 video. Not one person. I've had people call me an idiot. I've had people call me corrupt, a charlatan. Oh, you're just short. No, I'm not. I have no position in NVIDIA. Not one person has stood up and tried to offer an explanation for why the people who run CoreWeave ran a network of at least 20 shell companies in the Cayman Islands when they were trading carbon credits. Not one person could explain it. Not one person will stand up and defend the fact that all of CoreWeave's money, or should I say at least most of the billions of dollars that is being shoveled into CoreWeave so they can shovel it right into NVIDIA, that most of it is coming from Magnetar, an organization that is famous for creating sabotaged investments to sell to retail traders as exit liquidity while they simultaneously bet against them. Nobody has tried to explain that. They're just taking personal attacks at Samantha. They're just taking personal shots at me. Well, I guess I wish they'd take more personal shots at me. I'm just over here like, hey, hey guys, what about me? Don't forget me. I'm a charlatan too. Listen, guys, until somebody stands up and offers an explanation for this, all we have here is the people right now, CoreWeave, who is holding up the entirety of the stock market, used to do some very shady business dealings. Very shady business dealings that are the hallmarks of criminal activity. It is not a smoking gun, but it is a lot of smoke. A whole lot of smoke. So much smoke that you can't ignore it. It requires cognitive dissonance to ignore it. And I have to tell you guys, I have gotten a ton of messages from people. People I don't want to mention their names or anything, but I can tell you this is being looked into. But you know who I have not gotten a message from? I have not received one message from a journalist. Not one newspaper, not one media outlet, not one TV network. None of them have reached out or even retweeted. The press has cognitive dissonance when it comes to this story. And I know they've heard of it right now because the Twitter series got something like 1.4 million views combined, and it's been retweeted by some big players. So I know the press has seen this story. I've sent it to some of you in the press, hoping some of you would have the credibility, the ethics to be on the right side of history and talk about this story. I have not heard back from any of them. But this story has traction. It's not going away. So who in the press wants to be the first one to look into this? My sources in all of my videos are on screen behind me while I'm talking. So it is very easily for you guys to go independently verify everything I'm saying and make up your own mind if I'm a charlatan or not, or if everything I found, for example, the Independent Consortium of Independent Journalists website for the Paradise Papers that shows that Michael and Trader and Jack Hogan ran a network of 20, possibly 60 shell companies in their carbon trading days, incorporated in the Cayman Islands, an area notorious for tax evasion and money laundering. It can be very easily verified if I'm full of it or not. Somebody has to look. And I'm telling you guys, it was not hard for me to find this stuff. I found this stuff in just a couple of minutes of searching. I was the only one who bothered to look. That should scare you. Not just how corrupt it looks like some of these people are, but the fact that nobody special, some guy with a random dude with a home office YouTube channel, is the only one who bothered to look. Of all the people who are paid much more handsomely than I am, I might add, have failed to do so. So somebody with some journalistic integrity, please look at this story. Anyone. Bueller. That's all I got for you today. And I got some super chats I got to get to because you guys are awesome. Thank you very much, Ziv. I appreciate the super chat. Very much, sir. He says, great work on NVIDIA. Thank you, sir. I appreciate the kind words. Cheers from Prague. That one across the ocean. Well, howdy from across the pond, Ziv. Thank you so much for supporting my work, sir. And guys, let me just mention here as we're doing the super chats here, Ziv, thank you very much, sir. That was very generous. And thank you, Mike, the OG of the channel, for your super chat. He says, good morning, Jack. Keep up the good work. Here are some shots for you. Pew, pew. Yep. The establishment go pew, pew. We had Morningstar put out their little note, feigning indignance that they would even have to answer allegations from some Twitter rando, I think is what they called Samantha LaDuke. Go ahead, lead with personal attacks. Ignore the substance of the arguments and just go with personal attacks. You're only making people more suspicious, Morningstar. Nicely done. Keep up the bad work over there. But thank you, Mike. I appreciate that very much. Listen, you guys, this has been a crazy couple of days. It's been really hard to put this story down. I think what we're doing here, this CoreWeave story, what Samantha has stumbled upon, and what I'm developing and Cash App is developing, and people are starting to cover it and give it more attention. This is important work. This is a very important story, and I can tell you, this job does not pay. All right, when you do this right, when you do this ethically, there's a lot of sleazy ways to make money on YouTube. When you do it right, it's a little harder. So I just want to say thank you so much, Ziv, Michael, for the support of the channel. Thank you so much to my Patreon friends who I'm looking forward to talking to you guys today on our weekly Zoom call at 6 p.m. Eastern time. I can't wait to talk to you guys about the kind of week it's been. You guys supporting my work, thank you so much, all right, because it is important work we're doing. I hope you realize how important it is. I think we're making history right now. I think this is going to be talked about for a long time, and it is a very good feeling to know that I'm pulling back the curtain on what these people are doing, and you guys are a part of that. So thank you for being a part of that. You folks who are new to the channel, welcome, and thank you for subscribing to the channel. You guys who are supporting everything I'm doing here, thank you so much. Thank you to Samantha, who has put her name and her reputation on the line with this story. Samantha is a stand-up gal. She is sharp as a tack, and she found something really important there, and they're attacking her credibility right now. And they're doing it in a pretty sleazy way. They're doing it while ignoring the substance of what's going on, while ignoring the sources. They're nitpicking about mix-ups with BlackRock and Blackstone, which, let's be honest, guys, at some point in time, every one of us has referred to Blackstone as BlackRock or vice versa, all right? Let he who is without that particular sin cast the first black stone. And yet that seems to be the meat and potatoes of what Morningstar had to say about this whole story was, oh, these guys got BlackRock and Blackstone mixed up. Everybody's done that. Doesn't change the meat of the story. It doesn't change the shell companies. It doesn't change the Magnetar trade. It doesn't change the fact that there is nothing special about CoreWeave. Their business model is just a real estate investment trust. The only thing special about CoreWeave is that NVIDIA will give them chips and Magnetar will give them money. And nobody's saying why. And when you look into the history of the people behind CoreWeave, you start to get a pretty good idea of why, because they'll do anything. So thank you guys for supporting this important work. I really mean it. This is awesome. You guys are awesome. And we're not going to let this one, we're not going to let it go. All right? We have stirred a hornet's nest and expect to get stung. That's all I can tell you. And thank you, Nashville. Wow. Very generous, Nashville. Thank you, sir. I appreciate that very much. He says, share vids with my tech buddies. Spot on. Digital used to loan money to vendors in the 90s who couldn't afford to buy their tech. Vendor take that money and buy hardware digital. On the digital books, the loans were assets. The sales were booked as profit was listed. Sales were booked as profit was listed. You know, it sounds a little bit like channel stuffing. And I agree with that, Nashville. I think it's not so much channel stuffing as it is growth stuffing, because there is legitimate demand for CoreWeave's chips. And Nashville, thank you. This was a really good, really big super chat and very thoughtful comment. I'm going to bring it down because it covers my melon right now. And you know, I just don't feel right without my chin. But thank you, Nashville. I appreciate that. The demand for NVIDIA chips is real, all right? Everybody wants them, which raises the question, not that I think the demand is fake, but I think the demand is being driven by a speculative bubble. Everybody wants NVIDIA's GPUs, not because the end users are demanding them right now. Everybody wants NVIDIA GPUs because they think the end users will want them next year. It's a speculative bubble of GPUs. People are outbidding each other, piling in, buying billions of dollars of these things because they believe the demand will materialize next year. And even Michael Intrater in his CNBC interview, you know, they said, why are you doing this, Michael? And he basically said, well, some Stanford graduate in a garage might invent something really cool and need a supercomputer. I'm paraphrasing here, but he basically said some nerd might need it next year. Well, that's not demand today. That's you speculating that that demand may be there tomorrow. And you might be right about that, Michael, but you might be wrong about that too. And if that happens, well, then your business model isn't worth spit. It's a speculative bubble. The people who are buying the GPUs right now are not the end users. They're people who are buying them hoping they can rent them out for cash flow later. It's basically the people who piled in the Airbnbs saying, I'm going to rent my house out by the week, I'm going to make a fortune. Well, now none of those properties are cash flowing and they're all about to hit the market. It's the same thing. So the chips, yeah, I get it. They're awesome. And I get it. There's a lot of demand for them, but the demand is not end user demand. The demand is speculative demand about future end user demand. That's not safe. Might be right, but it's not necessarily safe. And NVIDIA has a history of manipulating earnings reports. I'll do a video. I'll show you guys. These guys have a history of making materially false, fraudulent statements in their earnings reports to make it look like they're growing faster than they are. And NVIDIA's share price is not based on how awesome the tech is. All right? Everybody's like, oh, the tech is so great. You don't get it. That's not why NVIDIA stock is 38 times earnings or 38 times sales. NVIDIA stock is 38 times sales because of the growth. So the stuffing of the growth, right, pulling forward demand into this quarter to make it look like they're growing faster than they really are. That is the story here. It's not that nobody wants the chips. Everybody wants the chips. It's they don't want them as fast as NVIDIA is making it look like, and they have a history of manipulating that. So thank you, Nashville. I appreciate that, sir. And thank you, Steve Woitis, for your super chat. He says, take subsidies from government and fall in line with the rest of the mainstream media. Yes, all right. Look, guys, I'm going to tell you a real quick story, and then we're gonna wrap this one up. I was working in the garden with Gigi a few days ago, and we were trimming a tree, and I hit a hornet's nest I didn't know was there with the trimmer, and Gigi was standing right next to the hornet's nest. She got stung 8 times, and these are bald-faced hornets. These things are electric when they sting you, all right? This was not a yellow jacket or a little bumblebee. This was a bald-faced hornet freaking hurt. And they stung her 8 times. She was hysterical. She's okay. Thank you for your concern. And thank you, Gigi, for being awesome through this whole ordeal. But the next day, I went out there with a pole saw, and I tore that thing to shreds with a pole saw. And, of course, I got stung. Maybe there's a moral to this story, but damned if I can figure it out. Onward with the CoreWeave story, everybody. Thank you so much for everything you're doing. Hi, Mom. Hi, Dad. I love you guys. Thank you, Patreon. Thank you for the super chats, for everything you guys do for supporting my work. You guys are awesome. Let's go make history. Till next time, live small and dream big.